Hi there everyone, good afternoon and welcome to Closing Trades right here on ET Now. I'm Avan Dabash and with me, no it's not Nikunj, it's not Aisha, it's not even Anisha, it's Ajay Sharma who's with me on this show. So good to have you Ajay, but the markets, well, not really celebrating the Friday mood and you know that all-time high level seems to be eluding us. So safe to say that it's a choppy session. Around the 18,560 mark is where the index is at, and yeah, we're clearly struggling to be sub the 18,600 mark, close to the low point of the trading day. And you know, those were hopes pinned on the broader markets, but today they're succumbing to selling pressure as well. So no great shakes across the board. Dull, lackluster, flat as a pie, whatever you want to describe it as, that's what the market is currently looking at. Private banks, in comparison to the rest of the market, they are managing to hold out. You're seeing a slight degree of outperformance by real estate. Do remember, you've got that Morgan Stanley downgrade as well, which is weighing down on a heavyweight like SBI in today's trading session. IEX, we'll be discussing that later, Ajay, on the show. And sugar stocks, it's clearly up and about in a sweet spot.
Well, that's correct. You know what's happening in the market is that ever since 2 hours back, the US Weather Agency confirmed that there is rising chances of El Nino. It has kind of made the market nervous. It is actually adding on to the nervousness which started yesterday in the commentary coming out from Governor Das that he actually trimmed the inflation adjustment on the lower side just by 10 basis points. The market was expecting 25. So that was one area of nervousness. And then, of course, no real hints that if there is any rate cut on the horizon, at least next 6 months. And that's why we ended at the day's low yesterday. And today as well, the highest point of the session was made in the first hour of trade. The point which I was telling you about, El Nino, the confirmation by the US Weather Agency that there is a El Nino which is developing is giving a sense to the market that though onset of the monsoon has happened, Kerala, but there could be some impact, and the quality of the rains this time could be impacted, and that is making people trim some profits on deep profitable positions, because we have rallied quite a lot from 16,800 odd to all the way to 18,720 thereabouts. So 100 points off from day's high. Bank Nifty, broader markets, all of them are slightly on the lower side. Vinay Rajani, a technical analyst, is also joining us along with Kunal. Kunal, let's start our conversation. Kunal, Vinay, afternoon to both of you. First of all, on the levels, 18,720 or thereabout it appears to be some kind of a resistance. And up till now, Kunal and Vinay, we have witnessed very good signs of buying on dips, which have happened almost for a month now. Do you think buy on dip will emerge now as well, or are there some levels you're watching out for slightly on the lower side? Kunal, why don't you start with your point?
Well, thank you, Ajay, for that. Good afternoon. So my sense is that this is a very strong bull market which we've seen over the last 2 months. Now, you know, like every phase of the bull market, this is a phase of a pause or a mild correction, profit booking, which is happening on the indices. I would term it as just a break on the very strong uptrend we've seen over the last 2 months. I think we've risen by 11%, 11.5% from the lows of 16,800 on the Nifty. So I think in that aspect, we may probably get into a phase of a pause for the next 1 week or so. But I would still believe that it's a very strong buy on dips market, and dips I think maybe closer to 18,400. That could be the first important level, and the second and the most important point would be at 18,000 mark. In fact, one of the very interesting observations is Ajay, that when the Nifty has given a golden crossover where the 50 DMA has crossed about the 200-day moving average, we've managed to clock almost 10% returns higher than the point of golden crossover, which means that 17,800 has been the point of golden crossover. And over the past so many observations over the last decade and more, we've seen that the index has risen by 10% at least in a span of the next 3 to 6 months. So this definitely becomes a buy on dips market and would have a bullish stance.
In fact, just 10 minutes back, if you look at the Nifty intraday very closely, 18,500, that level in the last 10 minutes is proving to be a bit of a support and market. The tick is higher. I wish we could pull up the tick by tick kind of chart as well. Vinay, do you concur with Kunal's view that this decline will also be bought into? Also tell us about the levels you're watching out for on Bank Nifty.
Afternoon. So I also agree with the Kunal, because overall trend is still up. If you were to look at the 20 days exponential moving average for both the indices, for Nifty it is has not been taken out. The exact level, the 20 days EMA is placed at 18,460. So Nifty is away from this level. And if you were to look at the Bank Nifty's support of 20 days EMA comes out at 43,860. So both these levels, strong support levels, are protected, and in history we saw that this level acted as a strong support, and bullish reversal was seen. So overall, trend is still intact. The breadth is still intact. No doubt, for last two sessions we have been witnessing some profit booking in small cap indices, small cap stocks. But if you were to look at the overall, still more than 65% of the stocks in NSE 500 are trading above the 200 days moving average. So primary trend, intermediate trend is still bullish. It is just a profit booking. We have to review the index view if Nifty breaks 18,460, which is 20 days EMA. If that is breached on the closing basis, then we will definitely review, and our stance will become bearish from the bullish. But till that happens, we are bullish, and still there are many stocks which are giving good opportunity to trade long. Some PSU banks and power stocks are looking very strong and going very strong. So I think there is a conditional scenario. As of now, it doesn't look like that it is a bearish trend. So keeping a stop loss of 18,460 in Nifty, and in Bank Nifty are suggesting a stop loss of 43,850. If these levels are protected, then we can expect a resumption of an uptrend.
On those power and PSU stocks, Vinay, but in the meantime, I just want to flag off some more stocks that are in the news today. You've got some of those life insurance companies that are in the spotlight, largely on the back of Macquarie's latest note. They've downgraded HDFC Life, ICICI Pru, as well as SBI Life, all to neutral from an earlier outperform rating, and the target price as well for each of these have been slashed. They believe that unless growth picks up meaningfully within the sector performance is going to lag, because near-term catalysts are also missing, and valuation support implies that there will be maybe limited downside. So those are the stocks in the spotlight today. Other than that, HAL in the news, the board is going to meet on the 27th of June, and they are going to consider a subdivision, so we'll be watching out for that. And we flagged off at the get-go, SBI, that's under pressure in trade today on the back of the Morgan Stanley downgrade. This is to equal weight from an overweight rating. They're saying that there's limited room for re-rating, and they expect the return ratios to have peaked and to moderate by FY25. I wanted to get in a view then on the entire financial space as a whole, Kunal, from you. What's the sense that you're getting when it comes to, that comeback? You've been talking a lot about HDFC Bank, for instance. Do you believe that consolidation is now behind us? SBI at the current levels, is it a prudent time to dip into the counter?
See, I think one thing is very certain, and that's an observation which I have seen for so many bull markets and bull trends, that whenever there is a shakeout, whenever there is a mild correction, there is a churn which happens onto the indices in terms of sectors. Now, for example, over the last 2 months, that there have been two phases of pause or correction. If you remember the day when HDFC Bank, I think, fell by 5%, 6%, that was the day when the Nifty had fallen very sharply. Post that, there was a complete change of trend where the large caps underperformed and mid caps managed to lead significantly ahead. I think in this phase of pause or correction for the indices, we could probably see a similar change for the index, and this time around the large cap names could start participating. So I would be clearly bullish on the likes of SBI, HDFC Bank, even the likes of ICICI Bank and Axis Bank going forward. My sense is that these large cap names should start to get into a zone of a very strong outperformance, and the mid caps may take a bit of a breather.
This is the first downgrade coming on SBI in a very, very long time. So clearly something to watch out for. Before we talk about your trading ideas, Vinay and Kunal, also pull up the entire consumption pocket. Pull up HUL, Britannia, ITC, Variety, I'll put Hero MotoCorp in that, because it's a rural consumption play. If you watch these stocks very closely, all of them are trading at days low or thereabout, on that fear which I was talking about. If El Nino, however pronounced or not so pronounced it is, if rains get impacted, the consumption part. So early in the morning, some fresh shorting at least in the intraday will happen in HUL, ITC, Britannia, all of them. Whether these become a buy candidate on decline is something you will talk about. But Vinay, the stronger ones, ITC, after making a 450, 55, it came back to 440 now. Is it a good buy at these levels?
I would wait, because it has reached to the 10 days low, and it has run up a lot. As you said, that it has given a fantastic returns to the investor, and profit booking may come. So we cannot rule out the running corrections in the overall bullish markets. So this is the same scenario at this point of time. Today is the first day it has breached the last 10 days low, which happens to be around let's say 440 odd level. So 440 is right now it is trading below 440. So I would rather recommend to wait to go long at this point of time, because today is the second day of the market is going down and sustainability is there. So FMCG index is also reached at the 10 days low. So overall sector is facing some profit booking, and I would suggest that wait for 2-3 days more. It could available at the lower level. I see a strong support around 420, 424 zone. So 2-3% more correction can be expected out of this. So wait for that. Short-term correction could be there, but primary trend is up. So investors should continue to hold on, but traders, I think, should wait for 2-3% correction on the downside.
Happening in RPG Life, there seemed to be a big move there. We haven't seen that kind of move in that name for a long time. Is it a breakout?
Yeah, it's a very good breakout, Ajay. In fact, the stock has broken 200-day moving average. It's given a price volume confirmation. The volumes today, I was just looking at the volumes over the last so many months. It's almost like a yearly, 52-week high in terms of volumes, which we've seen today for the stock. And it's been not a single trade buy for RPG Life, but it's been a consistent buying throughout the day, right from the opening when the stock opens up that 840 mark towards now where the stock is at 940 plus level. So it's a very interesting, very strong breakout. And these are the kind of moves which change the trend and makes the stock come out of a deep consolidation. Like what we've seen for RPG Life over the last 3 months, the stock was into a 80 to 100 point band. I think this move would probably now take the stock to closer to its 52-week highs, possibly in the next 1 month.
All right, that's the view coming in on RPG Life, a clear breakout being witnessed on the charts. Tell you what, we'll slip into a very quick break right here on the show. Stay with us. When we come back, we'll be discussing IEX in greater detail. What's ailing the stock? What's the outlook? Stay tuned for that and lots more on the other side. Welcome back. Still tuned into Closing Trades. As promised, let's discuss IEX. It's a stock that's under pressure in today's trading session, and that's largely on the back of the news that the Ministry of Power has directed CERC to expedite the process of market coupling. Let's understand what that means. We've got Ashesha here to tell us the details. Ashesha.
Well, yes, IEX is in focus for the second consecutive session. In fact, the stock has declined nearly 18 to 20% in the last 2 trading sessions alone. Yesterday, Ministry of Power came out with a notification where they gave a go-ahead to power coupling, which means that electricity will be traded across all exchanges at uniform prices. Currently, IEX is the most trusted platform for electricity spot price determination, and if this coupling was to go through, entire moat of IEX will be negated altogether. Remember, the company has already been facing intensifying competition for the last many quarters. Its market share has declined from 96% to 87% on account of intensifying competition. Company has reported muted volumes over the last several months. Spot rates are higher, because of which bilateral trades are also happening, and that has also impacted volumes of IEX over the last couple of months. Axis Capital, in fact, on the back of this regulatory change, has come out with a note where they have downgraded the stock to a sell rating. They've given a target price of 111 rupees per share. They say that investors should not wait and watch. Business model altogether of IEX is at risk, and that is the reason they have downgraded the stock. On the back of this regulatory change that has come in, the business model is at risk, and that is the reason the stock is under pressure today.
So circuit, it's down 10%. Ankit Kanodia, founder of, he's founder of a company called Smart Sync Services. All right. So he's there joining us to talk about markets, but we'll start our conversation. Ankit, thanks very much for your time on this stock, which is locked on down circuit today. We all know the concerns. Actually, they started yesterday. You have a view there. You have a counter view out there. Talk to us about why is market misinterpreting, in your view, what has actually come through? Because that's the message management also seemed to have given to certain section of the market, that actually people are getting it all wrong. Is that true?
Thank you. Thank you for having me. I hope I am audible. Am I audible?
Yes, we can hear you very clearly. Go ahead.
Okay, great. Thank you. So first of all, I'll start with a disclaimer, as we are SEBI registered investment advisors. So we have been owning IEX for a long time. And now coming back to the question which you have asked me. So first of all, I believe that market in general always confuse between uncertainty and risk. So right now, what has happened yesterday and what management has also clarified in their interview today is that there is an uncertainty related to market coupling. Now, market coupling, if you look at what has happened all over the world, that market coupling generally is looked at from a geographical point of view, wherein you pull in the demands of all the other geography, and then there is a single point where that is already happening in all the exchanges in India, right? Now, the other market coupling which the ministry has talked about yesterday is where all the bids of all the exchanges will be taken together, and then there will be a third-party agency which will be probably generating the discover the price, which the price discovery which happens on different exchanges today. IEX is also one of them. That will happen in the third party. That is something which is doing the round since 2019. It is not something which is new today. And if you understand the practicality of it, there is still a lot of execution challenges which it has to be met. And even one of the premier exchange, IEX CMD, also has clarified that they are still in the discussion mode. So right now the whole situation is uncertain. Uncertain means, yeah, if something like market coupling happens, there is definitely a risk to the model. But how much of that risk, it is very premature to tell today how it will happen, right? Market will always react and take uncertainty as risk, and that is why the stock has corrected. I'm not here to recommend whether to buy or sell, but what I'm trying to say is that what is more important for us as of now, and let me put another disclaimer that a business is not a still picture, but a rolling movie, right? So I am sharing my view, what is as on date, and we'll have to keep on looking at how things change over the period of time. Today, as per my understanding, whatever is happening, what is more important for us to look at is how are the volumes happening in the exchange. And if you look at the volumes, in the last year, the volumes really suffered a lot in the exchange. And there was a clear-cut reason for that. And what was the reason? There's always a clear-cut correlation. Whenever the price of electricity goes up, then the volumes will go down, right? And if you look at the price which are coming down sequentially over the last few months and even quarters, so this year, probably from volumes perspective, exchange, not just IEX, exchange as a whole should see a bump up in volumes. If that happens, as of now, market coupling is not something we should be worried about, because even if it gets implemented, my sense is basically I'm following what management is guiding here, is that it will take at least 2 to 3 years time to get implemented. So I would cross the bridge when we come closer to that bridge, or when it is a clarity that the market coupling is going to happen, not now. So that's my point.
Okay. So just to understand this, a little bit better, I know you said that you're observing the situation, but given the fact that you will have the entire moat of IEX as well completely negated, as it is the company has been facing severe competition, does this change, the long-term outlook then on IEX in light of this?
Sure, good question. So I'll just give an analogy here. Look at what happened to the telecom, the cellular market in India in 2003-04, when Bharti was initially there, and then in 2005-06, Reliance entered the market. We had similar kind of worry that Reliance will eat up the market share, and definitely Reliance did eat up some of the market share, in fact a large portion of the market share. But look at how Bharti did in that period. It did exceptionally well. And why? Because the market as a whole was going through a explosive growth phase. Look at the percentage of electricity which is traded on exchange. It is 6-7% today. And that is definitely, and why we are seeing all these announcements from government. Government wants more and more electricity to be traded. So there is a clear-cut tailwind to the industry. And even if new competitors come, they will take away some market share. That is natural to happen. But just by the sheer size of the industry growth, you can see that even IEX can continuously do well. However, if you look at the last 6 months or 1 year, you have seen that their market share has gone down. And there is a particular reason for that. A lot of the volumes have moved from day-ahead contingency market to a day-ahead market to day-ahead contingency market. And there is a price arbitrage there. and there is a government GNA regulation which is about to come, which was supposed to come in October last year, but now slated to come in August. When that happens, that arbitrage will not be there. So I believe once that arbitrage goes away, that some of the market share which has been lost will again be taken care by IEX. So that is where I am not so worried about in that sense.
Beyond IEX, what else are you looking at or are recommending to your clients or analyzing right now in this market? Ankit?
I'll not take stock specific
Sure.
name, but we are generally long-term buy and hold, low churn portfolio we have. So we look at longer term themes where there is a high under penetration and higher growth rate. So we are invested in some of the discretionary consumption names. So travel again is our discretionary consumption. Then there are companies like ACs, washing machine. I'm not talking about all the companies which are there in my portfolio, but discretionary consumption is a big thing where we are bullish on. We are bullish on some of the financial companies. So that's,
Ankit,
and IT and platform is also something which we are bullish on.
Ankit, let's talk about air conditioner space, because today also there's a note which has come out by influential brokering saying that, and in general the view is that this place is getting competitive and the weather patterns are also becoming very erratic. So there is difficulty in really estimating what the volume growth trajectory could be next few months ahead. Look at how Voltas is actually trading. For example, Havells is upping their game, Panasonic, all of them, Lloyds is doing well. The traditional biggies or dadas of this space were Voltas and Blue Star. Their positions seem to be getting compromised. Do you see that, or you see them come back, gain back market share which they've lost?
Sure. So I'll talk about Blue Star because again I'll start with a disclaimer that it is there in our portfolio. So there we are bullish because it is not just in the residential space. It gets a bulk of its business also through the capex boom which we are seeing all over the country. So this is a stock which can give you both. And again, today it is at a pretty high valuation. So I'm not recommending a buy at today's level. We have been accumulating since a long time. And this is the stock, you're right, that the residential AC space is very, very, very competitive. But this is one company where, because of advantage of the capex theme, the kind of international, the kind of industrial business they get through their channel, that is going to be beneficial for them.
Two questions.
Yeah. All right. Appreciate your time, Ankit. Thanks so much for joining in on the show and giving us your views. Let's move right on then and put the spotlight on the AMFI data for the month of May. Mutual fund AUMs have come in at an all-time high, and the SIP data as well at record levels. Let's understand a little bit more. Sharad's here to break down the numbers. Sharad?
Well, yes, in focus we are having AMFI's May data, and the SIP numbers have come out and they are coming at the record levels. They are above the 14,000 mark, and this is coming in after 1 month of downtick coming in the month of April. Now, the important thing apart from the SIP numbers is that the equity flows, that has come in at 6-month low levels, and this is because of certain profit taking going ahead in the mutual fund schemes in the equity space. Now, apart from this, the total AUM, the equity AUM, both of them have been coming at the record high levels, and the overall flows itself, they have also been positive for the second straight month. Now, of course, the focus would be there in the equity segment where they have seen a 27th straight month of equity flows coming in, and also if you look at the NFOs, they have added roughly 483 odd crore rupees to the inflows across 5 schemes. Now, of course, the NFOs have become a bit lesser because of all changes happening in the mutual fund segment. And lastly, if you look at the impact, more than 45,000 crore of inflows have been coming in liquid funds. And do remember, this is coming because of corporate treasury adjustments. But in the equity segment itself, there has been an outflow, especially from segments such as large cap focused TLSS segments, where large amount of outflows are seen. But the important thing is that the small cap and the mid-cap funds, they have seen strong inflows coming for the 4th straight month, and that is something too important to look forward to. Apart from this, also do remember the medium-term duration products as well as arbitrage funds, they have been seeing buying for the 2nd straight month as the market is factoring in a lower interest rates or interest cuts going ahead.
Breaking down that entire flow analysis, but we'll focus on the SIP data. The gist of all of that was the SIP data has come back to record highs. Vinay and Kunal, I'll urge both of you to check out the charts of some of the stocks which get impacted by HDFC AMC. Prudent, Angel One, Motilal Oswal. I'll come back to you in a moment with on those charts, but also time now to get in Amphi view also. NS Venkatesh, CEO of Amphi, reaction coming in on the kind of flows we have seen. Talk to us, Mr. Venkatesh, how did you analyze the flows this time? SIP levels are back to record levels.
Essentially, the investor confidence is high. The markets are also doing reasonably well. The investors have found that they can create wealth through the SIP route in a much more cost-effective manner. So, and long-term investments, long-term goals are being met. So that's why they are coming to the SIP route. SIP is at an all-time high of 14,724. As regards to 15,000, I would say that maybe by this financial year end, we should see the 15,000 crore also coming up.
All right, appreciate your time. Thank you so much for joining in. Let's get right back to the markets. And Vinay, I wanted to understand your take on a cluster of these fertilizer stocks. They're coming under a bit of pressure. What are the charts indicating?
Yeah, so the fact is the counter which is relatively stronger than RCF and GNFC and the NFL. So no doubt there is a correction for last 2-3 sessions and they have been under pressure. So I think this is the avoid kind of situation. I would not suggest to go long at this point of time, and the overall structure is also, they have been underperforming for last 1 month, and there is no significant momentum buying which is going on in this particular counter. So better wait and watch in this kind of scenario where market has started witnessing some profit booking. These stocks can also fall. So as of now, I feel that the stock like RCF and FACT can go down from here in the short term at least. Primary trend is up, but short-term trend is reversing on the downside. So better to wait for some correction, more higher correction, and we can also easily expect 5 to 8% correction in the short term. So I would rather going long. I would rather avoiding the long at this point of time and wait for the correction.
Kunal, that clutch of stocks which are quite correlated with the way flows are into the market. Do you see any idea coming on your chart? The 4 stocks which I named with Motilal Oswal, Angel One, Prudent, or even HDFC AMC. That's an FNO stock.
So yeah, I think HDFC AMC, Nippon AMC, Motilal Oswal, Angel One, these stocks actually, together over the last 1 month have seen a collective breakout for themselves. Now, for example, HDFC AMC, the stock which was almost at 1620, 1630 mark in the month of March when the selling was, very rampant, or the market was into a lot more pressure zone. And from there to now, where the stock is at 1900, 1930 plus mark, indicates that there's been a very good relief rally as well as a counter trend which has happened for HDFC AMC. In the same vein, even Angel One has recovered quite smartly. I think over the last 1 week, there was a very strong price volume breakout for Angel One when the stock had broken past above 1400 mark, and it's moved up higher by another 100 rupees. So it gives you a sense that this is a synchronized move, a start of a new trend, breaking of the previous resistances, moving up higher, challenging their respective 200-day moving averages, and then scaling up higher further from those levels. So I believe that this is a clear sign of a trend in the making for many of these AMC-related stocks.
Okay, there you have it. That's the view coming in. Let's get into those closing trade strategies then. And Vinay, what's on your radar?
Yeah, so basically I'm bullish on the PSU and power stocks. So from that particular space, I like NTPC. NTPC has been outperforming and the trading around its all-time high. So technical setup of the NTPC is quite strong, and entire sector as a power and PSU, both sectors have been performing very well. So considering the sector strength and the technical setup of the stock, I would recommend going long in NTPC. So I'm recommending June future here for the trading. NTPC June future around 180 to 183. I'm recommending a stop loss of 179. On the upside, we can expect a target of 189. So second pick would be from the sell side, which is IT stocks, Infosys, the large cap stock. So Infosys has taken a resistance, and it's a big gap which was created post the result announcement, and after that we saw that big gap was there, and in that gap it has taken resistance and now coming down, and fresh breakdown is seen from the upward sloping trend line. So considering the technical setup, I am recommending selling the Infosys June future around 1270. I am asking a stop loss at 1295, and we can expect a target of 1235 on the downside. So these are the two recommendations, one on the buy side, which is NTPC, and one in the sell side, which is Infosys June future.
NTPC clearly is a very interesting one. Vinay, in fact, I was just discussing with a research colleague that this stock is now trading closer to the highest levels it has traded in 10 years. So there's a decadal kind of move which is coming. Look at that. That's the 10-year chart. 10 to 13, actually 13-year chart,
Over
right?
10, yeah. It's
Can you
2010.
imagine? That's the strength of the chart. Every fall, this stock is coming out and barely gets discussed. So, Prashant Jain was on our channel a month back and he was recommending power stocks. There's a re-rating happening over there. Very interesting chart.
Yeah, and
there.
Vinay believes that even at this level, it's looking good as a buying opportunity. I'm not going to ask if you agree or not, but maybe get your closing trade strategies.
No, I do agree with the analysis on
Assessment,
NTPC. I
correct.
think it's a good breakout over the last 10 years. Then on closing trade, Maruti is one of the stocks which I think looks very attractive. The stock over the last 2 or 3 days has gone through a mild correction, but this could be a very good time to anticipate that the stock is heading towards a big breakout on the upside. It's playing a very good catch up with respect to most of the other auto peers. So that's a trade which I would look to punch in at the closing.
Because it's Friday, I want to take one more. I want to discuss one more chart with you, Kunal, which you had indicated me before the show started, and that's United Spirits. Do you think it's getting its mojo back?
Well, absolutely, Ajay. I've tracked United Spirits for a long time, and I've done this comparison between United Spirits, Radico, GM Breweries, Global Spirits, UBL, etc. The stock was a big underperformer, but tide is definitely changing for United Spirits. And I think this move, which you've seen over the last 1 month, indicates that this is a big breakout in the making, and possibly and finally a 4-digit mark for the stock.
So you only track the charts here, or do you analyze the products as well?
Only charts.
Only
I'm
charts.
teetotaler.
Okay. Vinay, do you like any of the charts there? The
Yeah, so
Friday charts?
McDowell we were discussing, and I see a resistance at 940. So still 40-50 rupees upside could be there. There is a downward sloping trend line adjoining the previous swing highs on the weekly chart. So it is a clear cut in a uptrend down. Short term and medium term trend is up, and clear cut textbook rounding bottom formation is there on the weekly chart. So it is doing very well, and an entire liquor pack is doing it. If you were to look at the Radico also, that is also been performing very well. So McDowell, I see a resistance at 940. There could be a 4 to 5% upside still on the from here. So yes, still into a clear cut uptrend, and 4 to 5% immediate upside we can expect.
Okay, there you have it, and that is United Spirits up and away instantly. Its year high is close to levels of 951. Time for a very short break. We'll be right back with Siddharth Khemka, who joins in on the fundamentals.
All right, half an hour more to go, 20 minutes more to go before you can start relaxing over the weekend. So let's chat a little more about markets. Siddharth Khemka, Head of Retail at Motilal is here. Siddharth, you saw the fall yesterday and today as well. Are you going lower, or we'll just hang around? This is a small nervousness, bout of nervousness, shouldn't worry much about.
Yeah, thanks, Ajay. So I think if you look at overall markets, we have seen a lot of strength both in the domestic as well as global markets, and that is on back of the strong macros that we have seen, especially for the Indian economy. GDP growth surprised everyone. GST collections continue to see strong upturn, and other smaller macro data points also. So, for example, the gross toll tax collections data came in yesterday, which also implied some improvement in the overall movement. You also look at the power consumption, which is at 8-year high. So all these trends definitely indicate that the Indian economy is on a strong footing. To top it all, we had the corporate earnings, which was kind of a 4-quarter high growth in terms of earnings. Margins have started improving, raw material costs have come down, and corporates have been able to pass on the price hikes because of the earlier raw material price that had gone up. So overall, net, I think while the short-term movement could be volatile given the sharp up move that we have seen in April and May, but the overall view continues to remain very positive. If you look at Nifty, it touched 18,600 first time in October 2021, and we are now back to same levels after almost 19 months. So the 1-year forward P for Nifty has corrected from 23-24 to now about 18-19 times, which is much more comfortable. And given that FY23, the overall corporate earnings or Nifty earnings grew at 11%, after almost 35-36% growth in FY22. And on back of this, we are now expecting about 15 to 18% earnings growth for FY24. So the earnings growth trajectory is good. FY23, we saw a lot of global macro headwinds, starting with the Ukraine war, then the commodity price inflation, and then to top it all, we had the interest rate hike cycle. So luckily for us, all these are now turning in favor. The commodity prices have come down, inflation is under control, and now we are looking at a situation where central banks are taking a pause before they start lowering the interest rates.
Siddharth,
So
you're very
overall-
busy these days, it seems, pouring into numbers, results, and so much of all of that.
Analyzing macro
That
reports all
you
day.
started ignoring your new, the look only. What's with the new look? For a
Just like
moment, I
that,
couldn't
think.
recognize you.
Just trying to have a new different
All
look.
right. Tell me something. You must have gone through the earnings season very closely, right? Talk to
Like
us
he's been
about.
so busy going through
Yeah,
that
he
he's
forgot
neglected
to,
his
you know.
look. Yeah.
But talk to us about some select juicy things which you have really looked at into the numbers in terms of biggest earning upgrades. Which are the areas, which are the management which are turning around the numbers and resulting in strong earning upgrades coming in?
Yeah, so I'll tell you, see, the one sector, so definitely banking and finance has been leading from the front, but I think auto is one sector which has definitely done the bulk of the batting in this quarter, and the highest upgrade that we have seen, especially in the large cap, if you look at the Nifty 50 companies, Tata Motors is where we have done bulk of an earnings upgrade. We are seeing the company benefiting from all round growth in across the segments, and the company has been generating a lot of cash flows. They are looking at reducing their debt. All the three business segments, you can say, are doing well. The domestic CV cycle is looking at a recovery or growth in the CV cycle in India. The passenger vehicle business is doing well on back of new launches. The EV penetration, Tata Motors has almost 80% market share in the PV electric vehicle segment. And the global JLR, that also is benefiting from improvement in the supply of the semiconductors, improvement in demand, and also penetration of EVs. So I think that is one space, the entire auto space, where I think a lot of upgrades and positive news flows will keep coming in, numbers will keep coming in, which would be surprising on the positive side, where Tata Motors is kind of leading from the front.
Okay, that's the view coming in, getting a little stock specific as well with Siddharth. And I just want to map out some of these interesting movers over the last 1 week, which have had a fairly decent run. Tata Tele, for instance, has scaled up nearly 25% in the week gone by. Suzlon, of course, a 13 rupee stop, but nonetheless, it has been a smart mover. There's been a Torrent Power as well. It's been a newsmaker. Abaz, 17% is what the stock has gained. And something like a Sharda Cropchem as well has been very active on the charts. Let's get in a view then from you, Kunal, as to how you're looking at some of these names. Anything looking good for a further up move?
Yeah, I think Sharda Crop could be interesting. The stock has given a breakout. In fact, we've seen most of the the fertilizer oil space showing signs of a very strong breakout. Fact was one of the stocks which led the breakout. Sharda Crop over the last I think 3 or 4 months was going through a patch of consolidation, but this move which has led the stock past about the 500, 520 mark is a very powerful move. And I would believe now that we could be looking at a strong volume breakout, so which means potentially another 100 rupees on the upside, 650, 660 should be a target which should be on the radar for Sharda Crop. And stop loss for this trade you can keep at closing basis 520.
Let's also get in Sharad, who's spoken to a lot of people in the dealing rooms talking about specific stocks. What is the buzz right now in the dealing room, Sharad?
Well, yes, in focus we are having Manappuram Finance, and what we are getting from dealers is that the institutional pressure which was there when it comes to the selling of the stock, that has actually come down, and Fidelity Group has actually trimmed down its stake over the last 1 month. Now, for the March quarter, the shareholding pattern for Fidelity Investments in Manappuram Finance, that stood at roughly 3.7% stake of the company. And do remember, the dealers have stated that the impact of the ED order, that has also been largely priced into the stock itself. Apart from this, also the company has stated in this recent con call that the company is having a sufficient liquidity of roughly almost 1,000 odd crore rupees, while undrawn lines are there of roughly 3,300 odd crore rupees. Now looking at the stock, especially the valuations part, we see the valuations of the 12-month forward price to book ratio that has fallen below 1 times. Now it's coming in at 0.9 times. Now you compare that with the peers itself, especially Muthoot Finance and IIFL Finance, their price to book value ranges between 1.7 to 1.8 times. So there is a valuation gap still, and that's what industry experts are expecting, that this would be favorable going ahead. Apart from this, also the month of May itself, there were some gyrations in the stock, but from there onwards it is up 10% from the May lows itself. And looking at the 12-month target price as set by the Bloomberg, it's coming in at almost 143 rupees share, and that indicates roughly a 23% odd return potential going ahead.
Okay, thanks very much, Sharath, for those details. Let's find out what those BTST trades are. And Vinay, what's on your radar?
So as I said that we are bullish on the PSU as well as the power company, and power finance companies also have been doing well. So REC is a one stock which is continuously doing good. It is trading at its all-time high, and today also with the momentum it is rising. Volumes are also rising. Price is also doing good. So considering all this, I am recommending going long in the REC for BTST around 149, keeping a stop loss at 145, and on the upside we can expect a target of 156. The another stock which is looking good is the Ramco Cement. So cement as a sector has been performing very well. So entire cement sector is looking strong on the charts, and from that Ramco Cement has taken a lead, and it is trading at its 52-week high. So considering the momentum and the kind of requirement we have, which is BTST, it requires a momentum. So Ramco Cement is looking good. So around 932, one can go long with a stop loss of 915. On the upside, we can expect a target of 960.
Okay, there you have it. That's Ramco Cements. What about you, Kunal?
So United Spirits is the first stock which I would suggest as a buy. Again, classical breakout for the stock, flag pattern breakout up move for United Spirits. So I would suggest the 920 as a BTST target, stop loss at 860. And the second would be a buy on BHEL. I strongly believe that this stock is due for a very big up move. It's shown a kind of up move over the last 1 month, but then post that it went into a consolidation. Now I believe that the stock should be ready for second round of up move, hopefully breaking past about the 90 levels as well over the near term. So target of 90, stop loss at 80.
All right. So those were some of the BTST ideas. Siddharth is still with us. Siddharth, there is one pocket of the market which has done phenomenally well in the last fortnight or so, consumption. After a bad quarter, on the view that, FMCG in particular, on the view that the worst is behind, volume growth will start kicking in, and monsoon will also aid consumption. But today, so Britannia was at a lifetime high, ITC almost 450 and corrected from there, HUL, all of them, Marico. But then the fear is now seem to be setting in that monsoons, the quality of monsoon may get impacted because weather agency in US has confirmed El Nino. Do you think the fall which arrives from here on in FMCG top counters should be bought into? Volume will indeed improve?
Yeah, so if you look at the FMCG index, it was the first index to cross its previous highs and make new highs. And rightly so, because the sector definitely benefited out of the fall in the raw material prices, especially some of the consumption items. And there was, as you rightly highlighted, the points which were expected to improve growth. And in the quarterly management commentaries also, we heard how sequentially the demand is kind of coming back. So one weak spot was the rural consumption demand, which was expected to get improved after the monsoon. So while IMD has been reiterating that there will be a normal monsoon, there are definitely risks because of the El Nino factor, and with the US agency now highlighting that this year could be a year of El Nino. And rightly so, we are seeing the stocks in FMCG sectors getting booked, especially from the short-term traders. Overall, I think the consumption demand is definitely set to improve, not only for some of the staples, but also for the overall discretionary space. We are seeing that in the auto sector, some of the consumption discretionary items, as well as in the retail space. So we are seeing how the demand is coming back, and how numbers are likely to improve for some of the retail consumption themes, some of the QSRs. So within that space, we just recently upgraded Avenue Supermarket from neutral to buy rating. We believe that there is a long runway for growth in the retail space. The company has utilized this time to expand its store footprint and will benefit the most when the demand comes back. The company has very good financials. Because of the weak same-store sales, where the stock had underperformed and valuations from its peak has definitely come down. So overall, we are expecting DMart revenue and PAT CAGR of 27 and 29% over the next 2 years. And because of the good cash flows that they are going to generate, we see a 16% growth in the retail footprint, which should drive the stock from here on.
Okay, let's talk about another area of the market which is doing phenomenally well and people may not realize, but cotton prices coming down is a big fillip for a lot of companies where cotton is the raw material. Pull up Raymond, pull up KPR Mills, Vardhman Spinning, Nitin Spinners. This entire value chain of spinners, apparel makers, all of them have been outperforming the market last 15 days because cotton prices have come down. Siddharth, what's your take on some of the integrated textile players?
So I think, yes, definitely there is some momentum that we saw in the textile players. We generally have a few of the home textile players under our coverage, not the entire textile sector as a whole. And within that also we have, say for example, we like Trident, which is a small cap company. We have a buy rating on that. If you look at the overall home textile segment, demand was kind of pushed back because of the key markets of US and Europe facing the slowdown and the recessionary pressures there. So which is bulk of that is now factored in with now the raw material, the cotton prices coming down. They would benefit to some extent on the margins front. So I think, yes, one can look at selectively in some of the textile names from here on as well.
And charts wise, Kunal, anything stands out from the textile space which looks smart?
I think Raymond is the only one which stands out. Ajay, I think the stock has gone through a different level of uptrend over the last 2 years. I remember, I think, tracking the stock at 440, 450 levels 2020, and from there the stock has gone through a very strong uptrend. So even at current levels of 16, 30, 40 for Raymond, it's still completing a bullish flag. So I think I remember almost a month back, there was some sort of a news flow which led to a mild correction for Raymond. But I would still believe that it's getting ready for a second round of uptrend. And hopefully this time around, the stock should break past above the previous highs of 1740.
Vinay, pull up Macrotech Developers, the largest real estate after DLF. This week it has done well. At 600, it may appear, actually there's a split over there. So the price is actually 1200 now. From 800 all the way to 1200 if you adjust it. But new price, of course, is 600. What kind of levels expected there? The momentum is backing this one. Vinay?
Yeah. So definitely outperformance is there, and it's a large stock and recently surpassed its 200 days moving average, and now it is also surpassing the previous swing high, which was at 592. This previous swing high was made in January 2023, and this is being taken out, which is a very good sign. So as a stock, it can perform very well, and sector is also doing well. So I see a next resistance around 634 for the short term, so which is around 5 to 6% away from this price. So momentum is there, sector is performing very well. So 634, which happens to be the previous swing high on the charts, can act as a next resistance for the counter. So one should continue to hold on this counter. Overall, it looks very convincing on the charts.
Okay. It does look convincing on the charts, but Siddharth, you may have seen the results this quarter. Not only Macrotech, but if you take Colte, DLF, any name you pick up, volumes and profitability is visible. What are the top names which you track or cover?
Yeah, so I think if you look at the entire real estate pack, the sector has been doing well, and company after company had reported record pre-sales numbers, which also got reflected into the financials. Unluckily, you see the stock prices had moved up earlier, and because of the interest rate hike cycle, the sector had kind of underperformed in the last couple of months. But now with the RBI taking a pause and a likely pause by the US Fed, I think the interest rate looks to remain benign going forward, which should aid the overall sentiments for the real estate space. Demand, which was initially very strong and people were thinking that it is a pent-up demand after the COVID, has fortunately sustained even after that. And that is where we are seeing that record pre-sales data coming out company after company. What has also helped is that the supply discipline that the large players have maintained over this period, despite the improving demand, supply has been very gradual and consistent just to meet the incremental demand. Overall, we have been positive. Some of the names that we are positive, we recently upgraded Godrej Properties. We believe that the valuations are comfortable. We continue to like Macro Developers, which is a large player in the Mumbai region, continues to do well, and we see strong growth there. So these two are, you can say, our preferred picks within the overall real estate space.
All right, 1 minute yet to go for market closing. Siddharth, Vinay and Kunal, thank you very much for your time. Enjoy your weekend, and we'll be back with all our panelists Monday morning, top trading ideas. But before we go, let's look at how the market is actually closing. 15,862, 18,562 actually, 18,500 is intact. So that's a solace. Almost 44,000 on the Nifty is also intact. Advanced decline is showing you almost 1:1. So it's not a very weak opening. It may be off highs Thursday and Friday, but not a complete disaster. For the week gone by, we have done pretty okay. Look at mid cap, small cap, kind of flattish closing. Banks have done well, and L&T has also helped. If L&T and ICICI Axis wouldn't have been there, the cut on the benchmarks would have been higher. The broader markets were much better in shape. So just a little bit nervous, a slight nervousness. See, till 18,500 is intact and 44,000 is intact on Bank Nifty. You can't say for sure that major weakness is actually coming in. So that's the market for you as far as today's action goes. Next week when we come back, we'll have to see the progress of monsoon and a lot of other triggers, flows, progress of monsoons. Those will be some of the triggers to watch out for to take a better call whether this rally is intact or are we in for a bit of a corrective move. Thanks very much for watching. Goodbye. News and analysis continues on ET Now, so stay tuned.